Very good afternoon and warm welcome to our webinar, yet again webinar that we are conducting. We have been doing series of webinars since we got the news for the first time that the corporate tax will be implemented in UAE. And one of the hottest topic from a Dubai perspective is about the free zone. I remember, when the corporate tax law came, lot of information in the law was mentioned that it will be clarified in due course or through ministerial decisions and cabinet decisions. And one of the last ministerial decision and cabinet decision that came out was related to free zones and the qualifying income and qualifying activities that qualifies for 0% tax rate as far as the free zones are concerned. And post that was on 1st of June, if I recall correctly, in 2023. Now, after that qualification, after that ministerial decision came for free zones, there has been a lot of debate that was going in the professional community as well as the business community on the interpretation of certain provisions of those of the provisions as per the ministerial decision and the cabinet decisions. And thankfully, FTA has been releasing series of guides in order to help interpret the law and the ministerial decisions and the cabinet decision. One of the latest guide that has been was released few days before, within this week itself, that is related to the free zone, what all different type of incomes that will be qualified as exempt and will be subject to 0% tax rate. And it is clarifying in great amount of details with lot of examples, which will help us understand the law better and interpret the various provisions of the law as well. So today I have with me my colleagues Pratik, Kinjal and Karishma, and we'll be presenting you these provisions as far as this particular guide is concerned in detail. And before we get into the topic itself, I would encourage you to write any questions that you have in chat box. And broadly, we will categorize these questions into 4 or 5 different categories. I'm sure a lot of you are from various different industries, various different fields. So I would want these questions to be categorized into something called substance, because we all understood that there is, I'm sure a lot of you are already aware that they have mentioned that there has to be a substance in the free zone entity to be able to qualify for a qualifying entity. Then there are certain categories of income which are defined in the law. For those who are aware and following about it, particularly professionals would know what is qualifying income. We will certainly get into the details of it as well as we go along in the course of webinar. Lot of trading community, my friends in trading business particularly, they are aware that if they are established in free zone, they are subject to a preferential treatment of tax. So, but there has been certain confusions when it comes to, trading and distribution activities, traders in the commodity space, gold and diamond traders. So please write down if you belong to that category of business, your questions, and we'll summarize this in these buckets as we go along, and we'll try to address the queries that you raise during the course of the webinar or towards the end of the webinar. Then there is a category called manufacturing category. That is also one of the category which if established in free zone is subject to preferential tax treatment. So if you have any queries related to the manufacturing industry, please write that. Anything that has to do with intellectual property, this is also subject to this is one of the qualifying activities. Then companies which are either investment companies or holding companies, if you have queries related to your industry, please do write down as well. Then wealth managers as well. So, and there's one more category, Pratik, if you may go right, which is the investment and fund managers. So if you can write all your queries that comes in your mind, and we'll try to allocate these queries in these areas, and we'll take these topics one by one as we go along during the course of this webinar. So, yes. So Pratik, if if we can
Yes,
go
we
back,
will change to the slide.
right?
Yeah.
Yeah, if we can go to the
But
slide.
I would really want you to know that there are a lot of questions that have already started coming in the Q&A box. So, we'll take that and
That's great. That's a
yeah.
good start. And we'll look into those one by one. During the course of the webinar, we'll try to do that as well as towards the end of the webinar. So let me go through certain very rituals, the slides that we want to present at, at the onset. This is our corporate tax team. We are trying to combine corporate and international taxation and developing the capabilities in order to address the three facets of life that we have in Dubai, which is wealth, death, and taxes. Of course, you cannot avoid death and taxes, but being in Dubai, I am sure you cannot avoid even the wealth part of it unless you go for a sadhuvadi kind of a zindagi. So we are trying to develop capabilities, and in the pursuit of that, we have been able to get together a brilliant team with myself, Pratik, Kinjal, Karishma, Kushal, Ashish, and Saurav. All of us are qualified professionals, and coming from Pratik is from International Taxation Team, KPMG. Similarly, Kinjal is coming from Big Four. Karishma has been, you all probably are aware of Karishma as well. So, our pursuit, as we go along, we'll see a lot of work that we'll be doing related to international taxation as well, apart from UAE corporate tax. And we are working towards preparing certain guides, particularly related to withholding taxes that UAE, assuming UAE as a center of the world for us, at least, right? We'll be creating a lot of those materials and sharing with you as well. So going forward, of course, we have been. This is one of the webinar that we are doing out of the series of webinars that we have been doing since last 2 or 3 years, since the corporate tax announcement, prior to the law coming into effect, post the law coming into effect, and then post the clarifications that are coming out of the law as well. So we have been following this, and and we'll continue to do this journey going forward as well. Apart from that, all our webinars are on our YouTube channel. If you want to go and revisit some of the topics that we have covered on various topics, you can always do that. Apart from that, we have been writing a lot of opinion articles, a lot of interesting piece of, about taxation. And that has been picked up by the leading newspapers. You can also go and take and read them as per your, and we'll be providing you the link at the end of this presentation to all of these opinion articles that are there already on the newspapers. Now, as I mentioned, it was in December 2022, the CT law was published. And on 1st of June 2023, the clarifications came in for the free zone, particularly Cabinet Decision 55 and Ministerial Decision 139. And after that, there has been a lot of debates, particularly the interpretations like interpretation of selling and distribution of goods from a designated free zone. A lot of debate was there, particularly when it comes to high sea sales. Although there has been some clarifications, and we had taken a stand that high sea sales would be subject to would be a qualifying activity, and that is further clarified in this particular guide, and we'll cover this in detail today as well. Post these cabinet decisions, there has been certain amendments as well. Particularly one of the significant amendment that came was related to inclusion of trading of qualifying commodities as part of the qualifying activities, which helps a lot of commodity traders based out of based out of free zones across any free zone in UAE and brings them into the ambit of, the exempt category when it comes to corporate tax. And now today we are discussing this guide and the provisions of this guide, the clarity that it brings in. Now, if you can go to the next slide, there are a few key highlights as far as this particular guide is concerned. See, this guide is not necessarily a legal document. I mean, according to the FTA, this is just a, there's a guide. Legal relevance of this guide is limited. You have to read the law first, and then you need to get to for the clarification purpose, we need to look into these guides. One of the thing that is there in the guide is that any free zone company should have a substance. If you have a paper company, whether it is an offshore company or even a free zone company with a flexi desk, if it is not substance, you will not get the benefit of the free zone tax regime. So you have to meet the substance criteria very well. There has been a lot of examples that clarifies the substance when it comes to this particular guide. For example, they have mentioned that if you are in a business of trading, then your sales team should be part of the free zone, and it should be that particular activity should be conducted in the free zone. They are calling it as core income generating activity, CIGA. Anything which is non-core, you can do from any other part of the world or from the mainland, but all the core income generating activity should be done from the free zone. There are some very interesting examples, like for example, in case of holding companies, if you are investing your wealth, the board meeting should happen at the free zone, while the execution can be done through a broker, of trading, right? So these kind of examples are there, which clarifies a lot of these things. If you are a fund manager, then one interesting example says that all the decisions of a fund manager is taken in the foreign jurisdiction. You are just implementing those decisions. Then it will not be considered as a core income generating activities. Then the second part of which clarifies in this particular, this is the qualifying income. We all know that there are 3-4 categories of qualifying income. Any sales from a free zone to free zone is qualifying income. There are qualifying activities, then there are de minimis and all that. So those are further clarified in this particular guide, and we will get into the details of this as we go along in all these 6-7 categories of businesses that we will look into. So without taking much of the time, keep writing your questions, and I'll go at the back, and me and Prateek will look into the questions for the time being. And I hand over right now to my colleague Kinjal and Karishma to run through the key provisions and key clarifications that are part of the guide. Over to you, Kinjal.
Thank you, Sheetal. Thank you so much for such a powerful kickstart to introducing the most awaited guide. So in next 1.5 hours, what we'll try to cover is a detailed analysis on the topic of substance, domestic, foreign PE, and then covering highlights of each qualifying activities with emphasis on examples. Now, one would think that while one could relate to the language used in the guide to the decisions used, the decisions which were issued earlier with respect to free zones, the examples which are provided specifically in the guide do provide some required clarity. So in the interest of time, let us straight dive into the conditions to be a qualifying free zone person. While all the conditions are required to be met, the guide has elaborately discussed on the condition of substance, with around 11 examples covering different scenarios and highlighting specific instances that even when a substance is created when there are 0 employees. Karishma, can I have the next slide? So in this respect, first let us understand what is adequate substance. So the ministerial decision which was issued in this respect did cover that having your core income generating activities in free zone, having adequate assets, having adequate employees, and incurring adequate operating expenditure would lead to creation of substance in a free zone entity. Neither the decision nor the guide have still discussed about the principles of what can be termed adequate. And the same will still have to will be subjective and will be evaluated on case-to-case basis. Next slide, please. What the guide elaborately discusses is on the principle of core income generating activities. So the core income generating activities are those activities which are essential and which add value to the business and thereby generate revenue. One of the interesting examples which was discussed in the guide was to differentiate between the core activities and the routine activities in case of a distribution business, where they had stated that even if only 4% of the workforce was working from a designated zone and the remaining 96% of the workforce was engaged in performing delivery activities outside the designated zone. Still, if that 4% was able to, still if the company was able to demonstrate that the 4% workforce is sufficient to perform the core income generating activities, the same would said to meet the substance test. So the first and foremost step in assessing substance is to identify the core income generating activities of the free zone person. Now, this exercise will automatically bifurcate into activities which are non-core or routine in nature. While core income activities are required to be performed within the free zone, your non-core activities can be performed outside the free zone or designated zone. Also, in case there's a mainland branch of free zone person and the activities carried out by the mainland branch would not be considered while assessing the substance of the free zone person. Once your core income activities are identified, the next step would be to identify assets, employees, and expenditure for each core income income generating activity separately. Now, for this aspect, it is time and again repeated in the guide that double counting of employees is not allowed. This implies that the substance provisions are stricter than they had appeared initially. And the last step would be to determine the adequacy. Again, what is adequacy is still not clear and would depend on case-to-case basis. Now, while these core income activities can be outsourced, the guide again appears to be stringent on the supervision requirements and suggests that a free zone person should put in place mechanisms to observe, oversee, assess, instruct, and provide guidance to ensure the quality. Now, this would again entail a discussion whether the free zone companies are required to maintain SOPs for the core income generating activities when they are being outsourced. Karishma, can I have the next slide? Now, discussing one of the clarity provided by one of the examples in the guide. This is with respect to a holding company which is engaged in the activity of holding shares and securities for investment purpose, which is a qualifying activity. Now, we would have seen that in case of holding companies where the core income activity would typically only be taking few decisions with respect to investments, no employees or operational substance is required. So initially there was an ambiguity that holding company not meeting the substance test because of this reason, would it disqualify to be a qualifying free zone person? So this ambiguity is very clear, is clarified by the guide, and it specifically states that no employees or operational substance is required in case of a holding company. However, there's one paramount thing which is also stated in the guide, which is stated is that decision making takes place only in free zone. Now, which is further elaborated by giving an example that the minutes of the board meeting should be in the office of the free zone. Now, this in turn opens a room for further question that whether only storing the minutes of the meeting would be sufficient for the purpose of concluding that substance was undertaken, or the board meeting should actually take place in the free zone. The next example is also on the similar lines of a fund management company which is engaged in providing fund management services, where the core income would be to take decision in respect of holding or selling the investments. Now here, the same principle is again highlighted to emphasize that place where the decisions are made should be the free zone. If the company is only executing the decisions without any independent evaluation, that would not suffice, and the company can lose the status of a qualifying free zone person. The third example which I would like to cover is of a headquarter. Karishma, can you have the next slide? The third example which I would like to cover is of a headquarter providing services to a related party, in which the role of senior employees is shaping the policies of the group company. Now here as well, one needs to see if the senior employees are operating from the office in the free zone. So although senior employees can spend some time relating to their role in assigning the respective group companies, undertaking trainings and all of that, but it is very important that the strategic decisions have to be taken in the office based in the free zone, and only then the substance test would be required to be met. Next slide. Now, just to summarize the substance section in few words, one of the key takeaway is that the underlying decision, underlying intention is that the key strategic decisions are made in the free zone, and more importantly, documented and kept in the free zone office. Apart from this, evaluating what is adequate still remains subjective, with certain guidance bifurcating between the core and the non-core activities. Now, holding companies are relieved from proving the operational substance. And with respect to employees, while same employee is permitted to undertake two core income generating activity, he is not to be counted twice while checking the adequacy. Outsourcing is also allowed, as I mentioned, but there does not seem to be, there does not seem to be any restriction on outsourcing in the same free zone or in another free zone. With the only condition that the requirement of supervision should be met. Next slide. Now we would briefly cover the concepts of a domestic and a foreign PE, refreshing our understanding on the PE bit. If you have a head office in free zone and a branch.
Yeah, just Kinjal, I would like to, pause here a bit if you don't mind. There are certain queries that I would like to pick up here. One, I mean, related to substance, related to, the topic which you have already covered. And one gentleman I am trying to see, has asked if the entity is only there for the visa purpose and no income is generated, what would be the tax implication? Would they still qualified for the qualifying free zone? So I'll try to answer this. For a free zone entity to get the benefit of a qualifying free zone entity, there has to be qualifying income to be generated. If you are not generating any qualifying income, right, then you lose the benefit of a qualifying free zone person, and then you will not be able to enjoy it for that year and 4 more years going forward as well. So this is very important that that to maintain, there are certain exceptions to it, like a manufacturing entity, they will be given some time in order to, to get to this, to generate, they take a bit of a time to generate the qualifying activity, but the intention is not to generate, then you lose the benefit of a qualifying, where you will be treated as a regular entity from that perspective. There's been one more question that for holding company, interest income from subsidiary, loan, dividend income, capital gain from sale of shares for a free zone company. So for holding company will be qualified as a part of the, as long as it is holding the shares for more than 12 months or the securities for more than 12 months. And there's also one question related to, adequate substance for free zone ship charters and ship management companies. So what is substance in case of ship charter and ship management? So your CIGA, core income generating activities related to the ship activity, has to be within that particular company and the free zone. You have to divide your activities between CIGA, core income generating activities, and ancillary activities. Ancillary activities can be performed outside the free zone, but core income generating activities related to ship management has to be done from free zone. And I think there has been an example also in this guide on that front. So these are some of the queries that we have, questions that we have particularly on this particular, substance. Please explain adequate substance for FlexiDesk. Now, this is a question that we keep on getting all the time. I mean, the most conservative answer to this is that go for an office. Even if it is 100-200 square feet office, go for an office. Because they have been silent also even in this guide about FlexiDesk. However, somebody can argue that I I mean, there is one example, particularly in this similar guide, that a holding company does not have an employee because it doesn't need an employee, because every circumstances you'll have to see according to the case of the company whether there's an employee required even or not, because it is only holding certain set of shares and it executes the trading of those shares through a broker. And board minutes, through board minutes, it is decided whether it needs to be executed. They don't need an employee. So somebody can argue that, if I don't need an employee, why do I need an office? Right? But again, in the same guide, the FTA is clarifying that, the board minutes needs to be stored in the free zone. So if you have a flexi desk, not sure how will you store certain key documents related to the company, So the conservative answer to this question would be flexi desk may fail the test of, the adequacy or the substance. I don't know. Is there any other question?
Not on this topic, sir, but yeah, other topics, I think once we
Yeah,
cover.
we'll cover the other topics later on. But
Yeah.
particularly on this thing, if there is anything, let's try to cover that. Yeah. Yeah, Kinjal, please.
Yeah. So the next, we would like to cover the concepts of domestic and the foreign PE. So refreshing our understanding on the PE bit, if you have a head office in free zone and a branch, either in mainland or outside UAE, the branch would be considered as a domestic and foreign PE and would be subject to take tax at 9%. The vice versa situation is also covered by the guide now, in which case a branch can be in the free zone and the head office is either in the mainland or outside UAE. In such cases, the head office would be a domestic PE or a foreign PE, and the same principles would apply. Now, interestingly, they have used a term in the guide known as free zone parent. Now, this term refers to the entity operating in the free zone. So if you have to look at the illustrations displayed on the slide, in the first two instances, it would be the branch of the free zone. And in the third instance, it would be the head office, which would be the free zone parent. So in such cases, even the branch can be called as parent. Next slide. Now, recollecting from the general rules, foreign PEs and domestic PEs are to be treated separately, separate and independent person from the free zone parent, and all the dealings between the PE and the parent should be at arm's length. The guide has also discussed a bit about the FAR analysis. It is also touched upon in the guide, where reference is specifically made to OECD PE report of 2010, as well as BEPS Action Plan 7 of 2018. Now, the guide, even the guide suggests the two-step approach for conducting the FAR analysis. That is, conducting the FAR analysis and determining the compensation based on the functions performed, assets deployed, and risk assumed. We would not go into much detail right now. It is also mentioned that if a free zone parent is earning income from its foreign PE or domestic PE, for delivering outputs which are used in the business of foreign PE or domestic PE, it would be treated as income from a non-free zone person. Now, also, as discussed in the earlier section, if the activities undertaken by domestic PE or a foreign PE, activities which are undertaken by domestic PE or a foreign PE are not to be considered while testing the adequacy of substance for the free zone person. Now with this, I think we will end the PE section, and what I'll quickly give you the background of the second most important discussed topic in the guide, which is of ancillary activities, and then open the stage for Karishma to take you through all the qualifying activities section. So the term ancillary activity is relevant because what would be covered under the qualifying activity and eligible for 0% is the main activity and the associate ancillary activity. There are certain general guidelines which are provided for determining whether the activity is an ancillary activity. So if any activity this is necessary for performance of the main activity or integrated to the main activity, the same would said to be covered under the purview of the ancillary activity. Similarly, if the activity makes a minor contribution to the main activity, and closely related to the main activity, the same would also be considered as ancillary. So there are few examples which are provided in the guide to be as ancillary are delivery and installation in case of goods, providing warranty after sale services, training and development services in case of a headquarter services. What is specifically excluded and important to note is the investment of surplus funds. So as businesses, every entity generally has some surplus working capital, which is typically invested in bank. So now it is specified in the guide that the investment of surplus funds is not considered as an ancillary activity. However, it might still be a qualifying activity, which is derived from treasuring and financing services, which would be discussed in the later part of the webinar. So with this, I open the stage for Karishma to discuss the qualifying activities.
Thank you, Kinjal. So I hope now the audience is well aware with what will be considered as an adequate substance, specifically as it is one of the important conditions to be treated as a qualifying free zone person. The another important aspect to be treated, as you all are aware, that you should derive a qualifying income. I would not go into the detail of every aspect what will be treated as a qualifying income, but just to broadly cover, whenever a free zone is dealing with another free zone person, all the income that you're deriving, except when you are having any excluded activities, it will be treated as your qualifying income. The moment a free zone is dealing with a non-free zone person, all the activities which you are deriving only with respect to qualifying activities that we will elaborate now in the further part will be treated as your qualifying income. Other than that, all income will be qualifying, non-qualifying income. Then if you're having any intellectual property, a qualifying intellectual property, then whatever income you are deriving with respect to ownership and exploitation of such intellectual property will be treated as your qualifying income. And lastly, and the most important condition is that other income apart from your main income that you're deriving, if you're deriving other income which is neither a qualifying income or your excluded income or specifically your non-qualifying income, that should be within the de minimis requirement. Many people have a question, how do we meet this requirement, or what all will be considered as when we calculate this de minimis calculation. It will be detailed covered in the latter part of the presentation, but these are the major conditions that you need to fulfill. If all these conditions are fulfilled, then your qualifying income straight away taxable at 0%, and if it is any non-qualifying income, it will be straight away taxable at 9%. Now, as I mentioned that you have to derive an income from a qualifying activities whensoever you are dealing with another free zone person and also with respect to a non-free zone person. These are the broad categories, as we all are aware of, the activities which will be treated as a qualifying income. And now with respect to this guide, they have very specifically included examples for every category of these activities. How and when will activities or the income that you are deriving from these activities would be treated as your qualifying income. So let's deep dive into each and every activity of the qualifying activity. If whenever you are deriving any income from this activities, what and under what circumstances it will be considered as your qualifying income. Very important aspect first, coming to the manufacturing and processing of goods or materials. Now, there are many manufacturing companies into the UAE in the free zones. When we say that what will be considered as a core income generating activities, as Kinjal has already explained that it has to be a core income generating activities, and also the ancillary activities along with the core income generating activities may be treated as your qualifying one. So specifically, the guide has elaborated that majorly for processing and manufacturing entities, whether it is a production planning or it is a production or processing or a quality control, it will be exclusively treated as your core income generating activities. Apart from that, if you are having any post-sale activities or providing any customer support along with your main activities, it also will get the definition of ancillary activities, and the entire income will be treated as your qualifying activities. Now, in the guide, in this new guide, especially, they have highlighted few of the important aspects, stating that what will not be treated as your qualifying activities, particularly with respect to the manufacturing and processing. So to elaborate the key takeaways with respect to manufacturing and processing of goods or materials as a qualifying activity, very first, manufacturing will include your toll or a contract manufacturing or even a full-fledged manufacturing. There are some of the entities which are having the manufacturing just done on a on a contract basis. You have a contract, you do the manufacturing, that's it. Apart from that, you don't have in-house plant developed by yourself to perform the manufacturing one. The guide very specifically states that repairs will not be treated as your manufacturing activity. So whatever repairs, neither it will be treated as your ancillary activities. So repair has to be treated as an altogether different streamline, and you have to see if the income that is generated out of repairs is within the de minimis requirement. Also, it says that processing, when we say processing, it has given a very wide definition of what all will be included in the processing. And it says that processing may not result in the new product. Sometimes even the assembly is being included in the definition of processing. You have in the manufacturing entity or in your processing entity, if you are having different items being brought together, you are assembling it and then you are providing it, that also will be treated as your manufacturing or processing activities. And of course, ancillary activities with respect to each and every manufacturing company has to be analyzed separately and on a case-to-case basis. There cannot be a generic ancillary activities defined for each company which are located in the free zone. The two important criteria which have been highlighted where they say that it will not be treated as your qualifying activity is when any free zone person, if we are performing any solitary activity which may not naturally be or integrally be forming part of your business, your main business activity, then it will not be treated as your qualifying activity. It's, suppose for example, it's a manufacturing entity and you have an aircraft or you have a car or you are disposing of and selling off that aircraft or any car. That is not something solitary or which is not a coherent or a main business activity. So the income that you will be earning out of that sale of property or sale of aircraft or a sale of car will not be treated as your qualifying activity. So you have to see if that income is coming into the category of your de minimis calculation. Also, another important aspect they have highlighted is with respect to software. Many companies, manufacturing companies or even the processing companies, IT companies do have this concern that what about the softwares that we are developing in-house and then we are selling it? Will that be treated as a qualifying income or come under the definition of manufacturing and processing? So honestly, the goods have been defined in the law and it says that creation of a software and selling it as it is will not be treated as a good. However, if the software is embedded in some hardware and then you are selling it off, then it will get the definition of goods, and the trading and the selling of that software which is embedded in the hardware, that will be treated as your manufacturing activity. So these are the key highlights with respect to manufacturing and processing. I would just quickly run through two major examples that have been provided. Actually, there are many, but I would like to take two major examples where, say, a company R who is located into a free zone, say Javza free zone, and is doing a contract manufacturing of, say, furniture. It is not dealing with any of the natural person, of course, because the moment it deals with a natural person, it will be treated as an excluded activity. And during the year 2024, it has earned 7 million with respect to sale of furniture, which is its core income generating activity. This will be straight away treated as a manufacturing activity and taxable at 0%. Now there are two more income that the company has earned. One with respect to sale of scrap and waste materials that were being developed during the process of manufacturing, and other with respect to the after sale services that is being provided. Now these two income, as I explained in the earlier slide as well, that where the sale of scrap will be treated as an ancillary activity as it is not forming the major part of the main activity, that is the core income generating activity. Kinjal also explained about the same part. Then wherever there is a minor attribution or a minor income that you are generating along with your main activity, it will get the definition of ancillary activities. Of course, again, it will has to be determined on case-to-case basis. So this income will be treated as a qualifying income. The entire income will be treated as a qualifying income and taxable at 0% in this particular case. Second case where there is a processing entity which has 3 factories, say suppose in Javza, and during the year it has earned 10 million with respect to timber processing, which of course straightforward will be treated as a qualifying activity and taxable at 0%. There is another two income that he has earned, one with respect to renting of an unused factory space and other with respect to dividend from an investment which was held for more than 12 months. Now these specific two incomes has to be elaborated and seen that, okay, first is renting of an unused factory space. I had a space, I rented it out and I'm earning a rental income out of it. Will this be treated as my ancillary activity? So unfortunately, this income is neither your main activity, that is the processing activity, and neither it is an ancillary activities. I think Kinjal has very particularly highlighted when there was the ancillary activities, the law, the guide very exclusively states that when it comes to renting, it will not be treated as an ancillary activity. However, this may get a definition of a qualifying income as it is a property located in a free zone. And if you are renting it out to another free zone person, then with that definition that the property with respect to when it comes to immovable property, it will be treated as a qualifying income. And lastly, dividend income that is being derived, of course, it is also a non-qualifying income. But if it comes under the definition of a qualifying income, that is with respect to holding of shares and securities, along with that, the other criteria will also needs to be understood. And with that respect, this income would also be treated as a qualifying income. Coming
So,
to the
yeah,
sorry.
Karishma, before you get to the distribution business, I want to say one thing, right?
Sure.
Is a great news that manufacturing is exempt. Not all manufacturing. We have to zoom out a bit. Manufacturing, if you are doing in any free zone in UAE, any free zone in UAE is exempt category. So you get a benefit of the activity called manufacturing if you do it in the free zone in UAE. However, you have to be mindful when you claim this benefit that you don't do anything other than manufacturing. As long as if it is not related to manufacturing, you will end up losing that, because suppose sometimes in manufacturing we have a license of manufacturing, but you are doing a bit of a trading as well. So you need to be mindful when you do a trading activity, it may not fall within the category, within the qualifying activity, and you may lose, if it is more than the 5% of your overall income, you may end up losing the benefit of, the manufacturing as well, the exemption that you have. So your ancillary activities cannot be beyond a certain limit of 5%, more than 5%. Your core income generating activity should remain manufacturing in order to continue to avail. Like you have seen the example here that, renting an extra office space or any other investment income, selling or, trading of those goods being in a manufacturing entity as well. So those are the things that you need to be mindful when you want to avail the benefit of tax-free status for a manufacturing entity in free zone. And there are a few other examples that are covered, but I think the examples that we have covered, Karishma has covered here, has been quite interesting. So the next part is related to distribution. Let's see if there is any question related to trading and manufacturing entity related in our Q&A. So one question is, manufacturing free zone exempt or taxed at 0%? It is, manufacturing is taxed at 0%. Yeah, there is one question is, free zone company providing warehouse management services in free zone under qualifying income. See, the qualifying income category is very clear. There are three sort of qualifying incomes, in fact, four. One is anything that you do from free zone to free zone is qualifying, right? So if you are providing providing services to a free zone entity, and that particular free zone entity is a beneficial recipient, it will be subject to qualifying income. Second, anything that has to do with the qualifying activity will be qualifying income. Third, that anything that has to do with the qualifying intellectual properties will also be under qualifying income category. And the fourth thing is, if you are doing anything which is very minor activity, which is de minimis, then these are the four particular categories of income that are qualifying income. So in your particular question, I think the warehouse management services that you are providing to a free zone entity will be part of the qualifying income. There is one question which is from, I think that topic is covered by Kinjal. What are the conditions to be fulfilled for qualifying company for free zone company? I'm trying to understand this question, but maybe it is to do with the qualifying free zone person. If your question is related to qualifying free zone person, there are certain conditions to be a qualifying free zone person. Those conditions are, first and foremost, you need to have a substance in the free zone. So you have to be a real company with adequate asset, adequate employees, and adequate expenditure. And that adequacy is a subjective element to it, right? Every condition or every circumstances we have to see in order to understand. The second thing, you need to generate qualifying income in order to do that, right? We have seen one example earlier wherein, a company is registered in free zone, but it's not generating any qualifying income. Then you will not be able to get the benefit of the free zone tax regime. And then these are the major condition. And then it should not earn anything which they have qualified as excluded activities. So anything that is part of the excluded activities will not be able to get the benefit of tax-free status. The excluded activities is if you are in free zone and if you are selling anything to natural person, there are the list of activities. If you are in free zone and holding any real estate other than commercial real estate in the free zone itself, these kind of things, then those particular excluded activities are not subject to particular this free zone tax regime benefit. Banking is one of those list of activities which is part of the excluded one. So we'll pick up from the qualifying activities. Now we get into the distribution.
So coming to the another important aspect, that is with respect to distribution of goods and materials when you are doing it from in or from a designated zone. The key points before getting into the important aspects when it will be treated or what all activities will be treated as your qualifying income when it comes to you're doing a distribution. Very first, I want to highlight important aspects of the key points which you need to remember whenever there is a distribution activities. Very first, the important aspect is the distribution should be undertaken or should be done to a person who is further selling or reselling these goods. So the moment the distribution is being done to an end customer or to end user, it will not get the benefit of being a qualifying activity. So that is the important aspect that we have to highlight, and we have to make sure that whomsoever we are distributing should not be the end user. Now, how will we determine, being into the practical world, how will someone determine that the person or the customer to whom you're selling these goods is using it for further resale, either for further resale or for process? So the guide has very particularly highlighted on the points that to make sure to whomsoever you're distributing is not the end user or not the customer, you have to take a KYC. Now, what do you mean by KYC? You have to take an undertaking or a declaration letter where you have to make sure and get a signed letter from whomsoever you are supplying it that we are a reseller or we are using it for further sell or resell and we are not using it for consumption. That condition or that importance would be on the seller. It will be on our responsibility whensoever we are distributing. We take that KYC and make sure that our income is a qualifying income. That is one of the important aspects that we'll have to be mindful of. The another important aspect that has been highlighted in the guide is with respect to a distributor and a sales agent. So the moment you are a sales agent, when you are just acting, you are not in the possession of the goods when they are distributed to you. You are just taking from some entity and you are transferring it back. You never have the title of the goods or materials at your end. In that case, you would never get the benefit of being a qualifying free zone person. That would not come under the definition of a qualifying activity. So these are the important aspects that you'll have to remember. Apart from that, the guide has also elaborated what will be considered as the primary activity and the ancillary activity when you are dealing with distribution. The one important aspect or important point that have been given in the law and the guide is when we say that it has to be end consumer, how do we determine it? Suppose in this case, if there is a company who is dealing into laptops, and a free zone entity is distributing or selling the goods or selling the laptops to a company, and that company is using it for its employees.
Now, will that be treated as an end user, or will be treated that it is using it for sub-sell or for further sell? So it has been very clearly specified that when the laptops are given to a company for the self-use of their employees, it will be treated as an end user. So every aspect or every distribution will depend on case to case, and we have to be very clear in understanding that whomsoever we are selling, we take an undertaking, we take a declaration, and make sure that the customer to whom we are selling is not an end user to get the benefit of being a qualifying activity. Now, the most talked thing is about the high seas sales. So much of the buzz was around what will happen to the goods which are not entering into the designated zone, directly going from one country to another. Will that get the benefit of the qualifying activity or the distribution one? Because there was no clarity. The law said that distribution of goods or materials which are entering into the free zones, into a designated zone, will be treated as a qualifying activity. So that is very much clear, as public consultation document has already elaborated on this point, but as it was not included in the law or included anywhere into any decision, it didn't give that clarity. Howsoever, our opinion was also clear at that time, and even this guide has made it more elaborative and cleared very understandingly that high seas sales, whenever there is a high seas sales and a third port shipment, in the case where the goods are not coming into the premises of the UAE and directly transferred from country A to country B without entering the designated zone, but the designated zone is just having the sales profit with this transaction, it will get the benefit of the qualifying activity. The another important aspect is when it comes to import, when the goods are first imported to the designated zone and then you are distributing it, suppose to a UAE or also to a mainland. The goods are first imported and then you are distributing it to a mainland. Even that income will be treated as your qualifying activity. Another one, when you are importing the goods, but not from another country, but you are importing it from the mainland entity, and then you are distributing it to country B. In this case, as the goods were already into the UAE, but they are distributed once they are brought into the designated zone and then being distributed and exported outside the UAE, it will get the benefit of being a qualifying activity. And lastly, if you are purchasing from UAE and then again distributing to the UAE, but via designated zone, then you may get the benefit of qualifying activity, and that income that you will be generating out of this distribution will be treated as your qualifying income. So the important of the thumb rule is the goods should be coming into the designated zone, or the goods should be directly transferred outside the UAE without touching the borders of the UAE, but that activity or those goods transaction or the high seas sales have been done via designated zone. The moment instead of the designated zone, it is another free zone, you lose the benefit of being a qualifying free zone person, and that income will be treated as your non-qualifying income. So that's complete understanding about the distribution of goods or materials coming in or from a designated zone. These are the key highlight points that have been taken care. So coming the another important topic when it comes to trading of a qualifying commodities. As we all are aware that earlier this trading of qualifying commodities was not part of a qualifying income. It was added after an amendment which was made into the decision, and in that it very clearly specified that whensoever a person is dealing in trading of qualifying commodities, physical trading of a qualifying commodities, which includes the metals, the minerals, the agriculture commodities and energy, that too in a raw form, and which are regularly traded on a recognized stock exchange, such like which are licensed and regulated by Central Bank of UAE or DFSA, FSRA, SCA, even Dubai Gold and Diamond Exchange, or any other commodities which are established outside the UAE but have an equal standing with respect to the UAE law, all such exchanges on which these minerals, metals, agriculture commodities are being traded, it will get the benefit of qualifying income, and that income you are generating out of the trading will be treated as your qualifying income. Now, the law has very clearly elaborated a lot on what needs or what will come under the definition of a raw form. It says that whenever there is a commodity which is a natural or unprocessed state, or commodities has undergone any sort of sorting, grading, or a minor refining, then also it will get the definition of a raw form. Now, of course, this is a very vague understanding which has been provided. We definitely need some more understanding into the raw form when they say that it has to be treated in the raw form. Coming to another one of the important aspect when it comes to a qualifying activity.
Karishma,
Yes, sir.
just hold your thoughts. When it comes to holding companies and all that, we'll come to that. But because there are a lot of questions here related to the trading community, I think most of the questions that we have is related to trading of qualifying commodities, trading of goods. So one fundamental question I want to get out of we need to discuss this there's a question from Sashi Nambiar. He's saying that, is there any free zone which is exempt from corporate tax? Kindly enlighten. So my immediate response to this is that, there is a regime in corporate tax, this particular, assumption that of that FTA has given free zone by free zone exemption. It doesn't exist like that. So FTA has given certain beneficial treatment to certain kind of activities that is performed by a free zone entities. And if you fall within those categories of activities and income, then you qualify for, the exemption category. Not blanket, like say, for example, if I am registered in DMCC, I'll get full exemption. It doesn't work like that, unfortunately. So you will have to see what activity that you are performing. And also free zones are broadly categorized into two: designated free zones and non-designated free zones. You get one significant advantage when it comes to trading of goods, which they have used in the law, a word called sales and distribution of goods, particularly done from designated free zone. They get an advantage. I think one of the question is also there related to, DMCC, while in some other free zones, you don't get advantage related to that. I think there's one question that is related to, the same topic from Jinang Shah. Sir, what will be the treatment for high C sales, which is something which Karishma you have just covered, i.e. back-to-back purchase of sales where goods are not entering into mainland in UAE? Is it exempt for all or for DMCCs or only for qualified free zones? Please give clarifications. So Pratik, do you want to pick up this?
Sure, sir. No. So as Karishma has said, and I think, the slide also says, whether it is, back to back entering into UAE mainland, that is less relevant. First, you'll have to understand, if you're in trading business, if you are based out of qualifying designated free zone, which is custom bounded, right? And you have substance, right, which is very, very critical, as already explained. Then even if it is back to back, third port shipment will be qualified income and there will not be any tax on that. So I hope this clarifies. Even if it enters UAE mainland via different designated free zone, it doesn't matter. What matters is your presence and your activity where you are performing it from. So if you are based out of a designated free zone with proper substance, you will get the benefit when you're trading in goods. I hope that clarifies.
So the answer is it exempt for all or DMCC or only qualified free zone? Unfortunately, DMCC entities will not get the benefit. Mainland entity will certainly not get the benefit. Entities who are in the business of trading of goods based out of designated free zone will get the benefit, right? And also there are certain things which Karishma has highlighted. You need to keep in mind substance, and the second thing is that you need to get a declaration, right, that it is not for the end use, it is for further resale, right? So you have to get the declaration from whosoever you are trading with that this is, this is not for the end use purpose.
So exactly where I was picking up one more question of Ajayji, where it said that qualifying free zone person sells raw materials to a manufacturer in India, which sells it to the final customer. So till the point you are selling it to a reseller, it's absolutely fine, right? Because you're not selling it to the end customer. So that's exactly what Sheetal sir was referring to. Even if it is from a designated zone to a reseller and you have all that paperwork done, then you're out of it. It doesn't matter if the last person or the next person who you sold to is selling to a reseller or the final consumer?
I think a very similar question from Abdul Kader is, so I'll not pick that question. A company in DMCC doing high C trading for commodity registered under recognized stock exchange liable for CT. See, this is a very good question, in fact, very good question. So it doesn't matter high C or non-high C. You know, trading of qualifying commodities, if as long as it is qualifying commodities, and if you are buying and selling those commodities, it doesn't matter whether the goods come here or it doesn't come here on UAE shores. It is part of the qualifying activities, and one will get the benefit, including a DMCC entity will get the benefit of that. So, and high C sale of a qualifying commodities, even DMCC entity will be able to get the benefit. Another one from Sahil Bhandari, we are dealing in petroleum and gas products from ADGM and will be qualifying income. Again, as long as it is part of the qualifying commodities, what you are dealing is actually you need to see what petroleum and gas product you are dealing. As long as they fall under the category of qualifying commodity, and they have elaborated this, you know, in a very, very detailed fashion, right? It has traded in a recognized commodity exchange. You know, as long as those kind of commodities you are dealing with, even if it is from ADGM or for that matter any other free zone, you will get the benefit of tax-free status. I think there's one interesting question that is dealing with core income generating activities vis-a-vis ancillary activities from Ajay Rajput. Under distribution of goods or material activity, it has been clarified that QA include qualifying activity include transportation, delivery and logistic. This is true. It has been clarified that transportation, delivery and logistic is part of the qualifying. I don't know, where is this going? Yeah. Under this can the chartering of ocean ship to deliver the goods from ports outside UAE to a ports outside UAE be considered as qualifying activities? Yes, very much. It can be. You know, I mean, it is very clear. The guide is clear that I might buy the goods, but my terms of shipment can be delivering at your doorsteps. So as long as, you know, I am doing that for, you know, for any goods that I am supplying from designated free zone, this will be considered as part of core income generating activity and you will get the benefit of it. There is one question from Ajay Rajput again. Is there a little confusion between trading activities as the transactions may not necessarily be on exchange? Activity of trade in chemical fertilizers on delivery basis, which is the best category for this trading activity or distribution activity? I don't know. I didn't understood the question, but you know, the benefit of qualifying commodity, the qualifying commodities are defined into 4 categories. One is agro, oil, metal and minerals. So if your question is regarding whether minerals can be part of the qualifying commodities, yes, minerals can be part of the qualifying commodity. You have to see what kind of minerals it is. You know, I mean, one of the thing which my friends in the diamond industry would like to, you know, claim is diamond is either part of mineral or commodity, which I unfortunately don't agree that, you know, diamond is not part of any mineral or commodity. And they also agree, they also try to argue that there's a diamond exchange as well, because there's one condition that it is, you know, it has to be traded in a recognized stock exchange. Suppose if you're dealing in rice, we know that it trades in a recognized stock exchange. Wheat trades in a recognized stock exchange. Pulses trade in a recognized stock exchange. Like, I mean, of course, oil, gold, these are all commodities which qualifies these conditions, which satisfies this condition. But if you are dealing in a mineral which is not you know, trading in a recognized stock exchange, then unfortunately you will not be able to get the benefit of the qualifying commodity trading as per the free zone benefits. Yeah, so I think in the interest of time, we'll move Karishma to other categories, because trading was full of questions. So I thought let's take it as we go.
Sure. So the another important aspect and criteria for qualifying activities when it comes to holding of shares and securities. Of course, around this activity also there has been a lot of talk. What about the income that will be generating? If just it's an holding company, what are all the categories of investments that would come under this state? So it has been very specifically cleared that whatever shares or share capital in which you are doing the investment, which is of equitable interest, and you are the holder around which you can receive profits, and even the liquidation process being as a legal or a beneficial owner, you will get the benefit of income that you will be deriving from such investment, that is dividend, the capital gain, or whatsoever other income that you are deriving from this investment. It will be treated as your qualifying income. One important concept that has been highlighted when it comes to a qualifying financial instruments or equitable instrument is with respect to cryptocurrency. It has been very specifically mentioned that whenever you are doing an investment, holding on shares of securities in the cryptocurrency, that will also get the benefit of the qualifying income. One more thing that you have to be mindful of while doing the investment or holding the shares and securities, as the investment that you're doing should be for minimum uninterrupted period of 12 months, or at least when you make the investment you have an intention to hold it for 12 months. It may happen that due to some circumstances, maybe after 4 months or 6 months, you have to dispose of the investment that you have made. But while making the investment, if your intention was to hold it for 12 months, you will still get the benefit of a qualifying income. Being a holding of shares and securities, sometimes it may happen that you may also receive a royalty or a management fees being a part of a holding company from your subsidiary entity or from your associate companies. This income that you are receiving as a royalty or management fees exclusively have been stated that will not be treated as income from holding of shares and securities, and it will be treated as your non-qualifying income. You have to see that if this is meeting the criteria of a de minimis one. If it is meeting, then entire income will be treated as your qualifying income. The just to elaborate on this part, say there is a company located in DIFC and it has several incomes, as you can see. One is dividend from shares, which is being held for less than 12 months, but there was an intention to hold for 12 months, and that income derived is 1 million. Another one, if there is if there have been investment into the limited partnership and you're deriving membership interest from that, the dividend from that, that also will be treated as your qualifying income. Of course, if you're deriving any capital gain on disposal of these shares and securities, it also will be treated as your qualifying income. And interest that you're deriving investment in bond, as it is given as a par category when it comes to investment in shares and securities, that income will also be treated as your qualifying income. Now, with respect to the first income, where it is stated that there was a dividend which you received with respect to holding of an investment, where you received the dividend even if the holding was not for entire 12 months, but you had an intention. The one question which arises that what if during the next year or during the another year where you have derived that income, you sell that investment without having the without satisfying the condition of holding it for 12 months, will that income, when you're disposing of will be treated as your qualifying income or a non-qualifying income? Now that is something which we need to understand, that this income, will it be treated as a qualifying income or a non-qualifying income, or it will be added back to your income whenever you're disposing of. This opens some of the gray areas where we need some more clarity to understand on such aspect. They have mentioned as intention, but what about the actual income when you'll derive from it? Coming to the another important aspect, another category which respect to fund management services. Now, whosoever is into the fund management as an investment or a fund manager, you have to see if you're deriving your income from core income generating activities or from investment and investment planning and strategy, investment diversification, fund management, performance monitoring. Apart from that, if you're also doing financial advisory, training and education, or any kind of technological support, all these income that you will be deriving will be treated as your qualifying income. It includes your discretionary as well as your non-discretionary fund management services. Apart from that, the important aspect with respect to fund manager is that you have to be regulated, either regulated or you are subject to a regulatory oversight with respect to the Central Bank of the UAE, or if you are regulated in a free zones that comes to DIFC or ADGM, then you have to be regulated by DFSA, FSRA or SCA. Unless and until you are not regulated, you will not get the benefit of qualifying income from whatever income that you're deriving. Now, these are all the income that will be treated as your qualifying income. Of course, if you're providing the fund management services to a natural person, then also will be treated as your qualifying income, as it is exclusively stated in the excluded activities that whenever you are giving the fund management services to an individual, to a natural person, that will be treated as your qualifying income part. Now, just to elaborate on this fund management services, suppose there is an entity which is located in DIFC, and there are two more entities which are located in DIFC itself. One is expert in cryptocurrencies and another is a legal firm. Now, company P was having or already managing the investment, and whatever income that it will derive will be treated as your qualifying income. It doesn't have a cryptocurrency specialism. That's why it has outsourced 20% of the cryptocurrencies that it is managing to company Y. And that company Y, whatever management fees is received by company Y with respect to this cryptocurrency management will be treated as a qualifying income. So even if you're doing a cryptocurrency management, that will be treated as your qualifying income. And another part when it comes to company Z, where company P has given a legal contract to company Z for managing some of the legal aspects, drafting of the contracts and everything. This income which company Z is deriving, it is not regulated in DIFC. It's just a consulting firm, mere consulting firm, a legal firm. This income will also may be treated as a qualifying income as it is received from company P, which is another free zone. So maybe it will not come under the definition of a fund management services, but as the legal services are provided to another free zone entity, as explained in the earlier slides, that whenever a free zone is performing any services or any goods or any distribution with respect to another free zone, unless and until it is exclusively stated as an exclusive activity, excluded activities, all that income will be treated as your qualifying income. And also company P in this case is a beneficial recipient. That also we have to see, and as both the conditions are satisfied, this income will also be treated as a qualifying income. One more important aspect when it comes to your wealth and investment management services. Now, what usually wealth and investment management services include with respect to your retirement planning, your estate planning, your tax planning, your budgeting, and it usually is customized based on the investment with respect to your short and long-term financial planning that you are trying to do. The guide very specifically states that whenever it is with respect to portfolio management, financial planning, or asset allocation, it will be treated as your core income generating activities. Apart from that, if there are any risk management, market research, or any kind of governance that you're providing to the customers, that will be treated as your ancillary activities. Of course, the wealth and investment management services has to be subject to regulation. So it says that it has to be subject to a regulatory body, maybe DFSA, FSRA, SC, or any other authority which is regularized by the Central Bank of UAE. Two important aspects or two important examples that have been highlighted in the guide is with respect to a single family office and a multi-family office. Many people or many companies which are located in, which are being set up as a single family office or a multi-family office have this question that what would be the category, or will they get the benefit of wealth and investment management services, being they come under the definition of doing the wealth and investment management for their own, for the family. But it has been very clearly specified that these being not regulated. So it has been specified that it has to be regulated. So if it is not regulated, your single and multi-family office, you will not get the benefit of being wealth and investment management services, and whatever income you are deriving will be treated as your taxable income. Coming to the last aspect, which comes to the services when it is being provided to related parties. Now, there are two broad categories whenever there are services you are providing to related parties. One is with respect to the headquarter services. The other is treasury and financing services. So the core income generating activities, when I say that, when you say that you are a headquarter company providing to related parties, it will come taking the relevant management or strategic decisions, incurring any operating expenditure, your financial management, your human resource management, any kind of technical support. Along with that, the training and development, it will be treated as your ancillary activity. Then it will be treated as your core income generating activities, and whatsoever income being a headquarter you are deriving from your related parties, may be located in the UAE or located outside the UAE, will be treated as your qualifying income. The related parties definition is same as which is given in the law. We have to elaborate what all persons would come under this related parties definition, and of course it will include your foreign and domestic team. Now, the highlighting point in the law is with respect to treasury and financing services to related parties. It says that whenever you're doing any treasury and financing services, particularly with respect to the cash management, investment management, risk management, or financing for your related parties, whatever income you derive out of those activities will be treated as your qualifying income. Now, related parties definition under this would be same as already which is given in the law. Apart from that, it also says that if you are deriving income from self-investment, and it has a very particular example, Kinjal has also taken that in the earlier part of the presentation, that if I'm doing self-investment, that is, I'm doing the fixed deposits, or even I'm earning from the savings bank into on those excess funds which I have, or a surplus funds that I have, it will be treated as a self-investment, and that income which I'm deriving from the investment will be treated as a treasury and financing services to related parties. So this is one very important and concept that has been defined, that self-investment income will be treated as a treasury and financing services. Lastly, of course, being a related parties, the transactions should be at arm's length principle, and transfer pricing documentation needs to be done. Coming to, of course, there are other activities as well when it comes to ownership and exploitation of your ships and the aircrafts. But as we are short of time, we have tried to cover the important and the hot topics which everyone need to be aware of. The excluded activities is the banking activities, leasing and financing that we are providing except to the related parties. Any kind of ownership and exploitation of movable property, immovable property, other than the commercial property which is located in the free zone. And lastly, whenever you're dealing with the natural persons, that will be exclusive, that will be an excluded activities. Only the activities which are with respect to fund and wealth management or ownership and financing and leasing of aircraft, if those activities are provided to natural persons, they will get the benefit of being a qualifying income. So, and coming to the de minimis requirement, as already explained in several of the qualifying activities, we have to see if you are deriving income from qualifying as well as non-qualifying income. The non-qualifying income part should be less than 5% or total 5% of your total revenue, or 5 million. Then only you will get the benefit of being a qualifying free zone person, and your entire income will be taxable at 0%. Now, important things which anyone has to be mindful of while calculating de minimis requirement is what all income will be treated as non-qualifying revenue. So it is your excluded activities, even though if it is providing to a free zone person or a non-free zone person. The moment you are providing any non-qualifying activities to a non-free zone person, and you are dealing with another free zone person who is not the beneficial recipient, then all such income will be treated as a non-qualifying income. Then you have to see if this income is less than 5% of your total revenue, or 5 million, and if not, then entire income will be taxable at your normal standard rates. While calculating this non-qualifying revenue as well as your total revenue, one has to be mindful that there are 4 categories which you will not calculate or you will not include in your taxable income, neither while defining the de minimis calculation. That is with respect to the immovable property which is located in the free zones, and you are dealing with a non-free zone person with respect to a commercial property, or you're dealing with any other person in respect of immovable property that is not a commercial property. And when you are having a revenue that is attributable attributable to your domestic or foreign P, then all such income straight away will be taxable at 9%, and there is no exemption limit as well when it comes to such income that you are deriving. Just to summarize the entire calculation for a free zone, how you will determine catered into qualifying activities into your non-qualifying activities, and to get the benefit of 0%, very first you will determine what is your entire revenue. Whatever income you're earning, maybe from interest, from a qualifying activity, from manufacturing activity, from investment, or from whatsoever activity, you first calculate it. From that, you will deduct the specific income which will be taxable straight at 9% without the threshold of 375,000. That is, as I explained earlier as well, with respect to revenue when it comes to domestic or foreign T, with respect to immovable property, also with respect to revenue that you're deriving from ownership and exploitation of intellectual property. The balance income, after deducting this income, whatever balance income you have, that is the qualifying and the non-qualifying revenue. Now you will see in that income, if the non-qualifying revenue part, that is the income from exploited activities, if that income is less than 5% of your total revenue or 5 million, then and then only your entire income will be treated. You get the benefit of being a qualifying free zone person, and your entire income will be taxable at 0%. If not, then you lose the benefit of being a qualifying free zone person, and your entire income will be, you lose the benefit. As you lose the benefit of being a qualifying free zone person, you automatically get the taxation at standard rates, that is at 9%, about 375,000. So this is how you will have to determine your entire income when it comes to determining the qualifying and non-qualifying income. So yeah, I think this was all from our end, explaining about the key highlighting points of the guide, which have been very specifically included. The guide actually elaborates and explains a lot of things and lot of questions that people had. There was a lot of ambiguity. That is so far so much clear. Of course, there are few still points which we need more clarity, but most of the dust is quite clear now, and I hope we were able to justify the report, and you have been able to get an understanding on all the free zone part. Now we would like to have some Q&As. I think the pending Q&As that we have, if we can have those.
Yeah, so first and foremost, I'm really glad to see today almost around 86 questions were asked, out of which we tried to answer already 51. Either we have done it during the course of the discussion or, online. I mean, there are certain queries that I'm seeing are very, very fundamental that people are asking, fundamental in the sense that, like, for example, this query is crowdfunding platform registered in DIFC, regulated by DFSA, considered as doing fund management service. This is a bit of a wishful thinking, stretch of a thought in my view. I mean, you have to go by the law. The law is very clear. Fund management activity, I mean, a crowdfunding platform, even if it is regulated, will not unfortunately get the benefit of, a free zone tax regime, because it is not coming under any of the list of the qualifying activities, right? So you'll have to see, you cannot be wishful at the same time. We have to be practical in terms of, what's the language of the law, and read the guide in conjunction with the law. I mean, there are few other things. I think we can take one or two, because it's been already 1.5 hours. And what we can do, Pratik, if it's okay, I think let's take one or two more questions, and then we can invite queries over an email. We can show our email ID so that they can write the queries on our email. We'll try to come back to you on one-by-one basis after this webinar.
Correct.
So can we write here our email ID?
I think the next slide covers it. So Karishma, if you can go to the next slide. I think till that time, I would just want to, take some few questions that I saw was common, specifically when it comes to service industry. There were 4 or 5 people who said media, legal, consulting, whether if it is operating from free zone will get the benefit. So I would answer this in two folds. One, if it is from a free zone to free zone, yes, possible that if all the other conditions are met, you will be getting that as a qualifying income and you can take the benefit. Otherwise, any income that you derive from a service industry is specifically out and you will be taxable on that, even if it is a designated free zone, if it is a free zone. So even if marketing, if a person is doing marketing or earning commissions or doing legal consulting or firms like us, will be taxable. The only catch here is the small business relief of 3 million. So I hope that clarifies at least for the service industry. I think now we can take some few questions, Sheetal sir, which is important.
Yeah. And we have shared the email ID. And if you can write, if your question is not covered today, you can write it to us and we'll try to come back to you. I mean, one question here that I can see is that where can I get the list of recognized stock exchange? There is no list that has been shared as a part of the law or as part of the guide. It is just mentioned that recognized stock exchange, and they've probably named also some of the stock exchanges like Chicago Stock Exchange. They've named one or two, but there is no specific list which they have provided. But I would expect any recognized local or international stock exchange should be good enough.
Correct.
There was also a question I saw somewhere, where can I get, I mean, there was one free zone somebody is asking was part of the designated free zone or not. There's a list which has been published by FTA even before the CT law came into effect from a VAT perspective, which is the list of a designated free zone. So that can be obtained and we can share with you the list of designated free zones.
So do we need to have to meet all the requirements at the start of the taxability in order to benefit as a qualifying free zone? So I would just want to answer that it has to be throughout. I mean, just after, incorporation, if you're not meeting it for a few months or during the year, if you're not meeting it, you will not get the benefit. It has to be throughout the year. All the conditions have to be met. Otherwise, you will not get the benefit of a qualifying free zone. I hope that clarifies. I think Kinjal has already replied on beneficial recipient, which was a hot topic, and a lot of people had that query. Sir, anything that you feel is pending?
No, I think, see, there are a few things which I would want to say to end the session, right? If you want to claim the benefit of free zone tax regime, you need to see whether you are satisfying the conditions, and they are very complex. Trust me, it took us a while to understand the law first. It took us a while to interpret the law. Then this 130-page guide is helping us to interpret the law. Still after that, there are certain areas which is also not covered in the guide as well. So it is an evolving space. So you'll have to understand whether you will be able to claim it or not, because it comes with this exemption comes with lot of conditions, lot of caveats, right? And even if you are eligible, even if you can potentially satisfy all the conditions, you have to be mindful that once you subject yourself to be a qualifying free zone entity, getting the benefit of free zone tax regime, then you have to give up certain benefits that you get, by not having it as well. For example, small business relief, you cannot avail the small business relief if you are a small business. You cannot transfer the losses among group companies. There is something called transfer of losses among group companies. You cannot club 5 companies and file one return. So you cannot do grouping. Fourth, you have to have audited financial statements. In case of a normal company, you need to have a 50 million dirhams of turnover for audited financials. In case of free zone company, even if you have 1 dirham of turnover or no turnover, you still need an audited financial statements. You you have to maintain transfer pricing documents. The limit for a normal company is 200 million dirhams of turnover to keep all the transfer pricing documents. For a free zone company, you have to it's must to maintain all the transfer pricing documents. So there are these kind of things which you need to be mindful of, right? Even if, and you need to take a business decision whether it makes sense for you to take the free zone benefit or not. Second thing I want to highlight that, even if you think that you are in exempt category, you are an offshore company, you might be able to get a free zone tax benefit or whatever, you still need to register and file the tax returns. And registration deadlines are looming on our head right now. The first set of registration deadline is 7 days from now, which is 31st of May. And after that, according to the trade license date, the registration deadlines are there. So don't wait for the last day, because I'm sure a lot of people are getting busy. Professionals particularly are getting busy. So register your entity. You are in UAE. If you are in UAE, you know that penalties are always hefty here. So you don't want to get to the to the territory of paying penalty. So register your entity without waiting for the last deadline. Whether you are qualifying, not qualifying will determine later, right? But registration is irrespective mandatory for all the entities. As far as registration is concerned, there are certain things that you need to keep in mind. During the course of registration, you need to choose your, tax periods, and that is determined by your financial years. I have seen lot of people registering in a wrong manner. I mean, they are registering, there's a bit of an hangover, of VAT in certain cases. When it comes to registration, people have been registering according to the quarters, all that, which you should not do. It's a corporate tax, and you need to be mindful that you register and the details that you put while registering, you have to put your financial year according to your audited financial year that you have been following. And you need to be mindful of what are all things that you need to be, you need to satisfy, and when you need to file your first tax return. So these are the things that I would like to highlight. We are available to answer any of your queries as you go along, and please feel free to reach out to us. We have created a WhatsApp group as well, where we'll be posting a lot of updates, interesting updates on a daily basis, when it comes to every single category of business, whether it is trading, manufacturing, fund management, single family office, multi-family office, holding company, treasury, shipping, all different categories of business will be picking interesting topics, substance, so just keep an eye on it, and we'll be clarifying those topics as we go along in order to we are trying to be the agent of that change that this economy is going through. And the change is not easy. I mean, a lot of people who have been in the UAE for last several years, it took us a while to unlearn the taxation. From a no tax regime to even a low tax regime is a significant change, and that requires a lot of discipline in terms of maintaining your books of accounts and then reporting it. So we are there as a set of professionals in order to cater to that. So I would like to thank yet again, and thank you to all the participants for all the questions. I think 88 questions, I can see that now. And thanks to Pratik, Kinjal, Karishma, and my colleagues Kushal and Ashish, who have been very helpful in understanding and interpreting of this particular document in very short period of time. Thank you yet again. Stay tuned with MICS.